Hi, welcome to another edition of Soluna's Ask Me Anything, where we answer shareholders' frequently asked questions. I'm John Tunison, CFO of Soluna Holdings, and I look forward to addressing the following questions. Before we get started, some legal points. Let me remind you that the following content is completely qualified by the legal disclosures on the following slide. Our goal is to share with you some of our strategic thinking and financial analysis we are using to guide the growth of our business. The content is in line with our principles of being accountable and transparent with shareholders. We operate in a hyper-dynamic economic environment. That's really a fancy way of saying things can change quickly. So what we're telling you here is based on our estimates and assumptions, which are our best guess. We, as always, reserve the right to revise our point of view based on new information and changes in the business environment. Despite an uncertain and dynamic environment, we must plan for and make operating and investment decisions. This presentation lays some of that out for your review. Let's dive in. Our first question comes from David, and he asks, how does the subsidiary basis of Soluna Cloud impact my shares of Soluna? That's a good question. Similar to how equity ownership of our existing data centers, like Project Dorothy, resulted in accounting consolidation of the entity profitability and a split of the project cash flows between partners and owners, Soluna Cloud will have a similar dynamic to the extent there are other equity participants. There is no direct impact to your Soluna Holdings, Inc., or SLNH, shares. The next question comes from Robin. What is the long-term growth goal for Soluna Cloud, considering that the start is already expected to deliver 38 to 80 million in revenue over the next 3 years? Thanks, Robin. Soluna Cloud, as we've said and will continue to say, represents an exciting and important component of our future growth. As we continue to develop our 2 gigawatt plus pipeline of renewable power projects, we will build high-performance compute and AI-focused data centers under Soluna Cloud and Bitcoin hosting-focused data centers under Soluna Digital, sometimes even within the same project. Our goal is to continue to extend the size of our pipeline of projects, accelerate the development of new projects, and increase the total number of megawatts in operation, which includes growing the share of high-performance computing and AI-focused data centers. Soluna Cloud will house our GPU cloud and co-location businesses. As AI takes hold in the enterprise, there will be an increasing demand for sustainable, scalable resources for AI training, tuning, and inferencing. We aim to be a key player in this vibrant ecosystem. Stephen asked, based on your public announcements, there appears to be a solid pipeline of energy supply opportunities for Soluna to tap into. What is your projected growth rate? Online AI Bitcoin megawatts over the next 12 months. What are the main elements that will impact the growth rate on future data center and Bitcoin projects? Great question. Let me see if I can answer. Our pipeline is indeed growing, as you point out. Our current goal is to more than double the number of megawatts under operation to over 150 megawatts at the end of the year or early next year. That hasn't changed. We've said that before. And this is driven primarily by the energization of Project Dorothy 2 and more Soluna Cloud projects. Our growth rate has been constrained by our access to capital, but as you can see via recent announcements, we're accelerating the pace of development and the size of projects successfully, and we look forward to sharing additional news on this in due course. Thanks, Stephen. Next, Frank asked, I've heard AI requires 100% uptime. How will you guys be able to sustain that? Yeah, that's a good question, Frank. I think it requires us to go into some of the details of AI. So there are actually multiple stages of the AI lifecycle. For example, there's training, tuning, and inferencing are the three major ones. And some of those do indeed require just about 100% uptime, but there are others that can be batchable. The training and fine-tuning phases specifically are particularly well suited to compute environments that have less than 100% uptime, where a trade-off to secure industry-leading power and infrastructure cost, which is where Soluna plays and our advantage and where we're uniquely positioned to deliver, where you can make those trade-offs easily. The innovation we're focusing on is placing this batchable portion of AI at renewable energy projects to deliver sustainable, scalable, and cost-effective digital infrastructure to enterprises who care deeply about the ESG implications of AI. Our next question comes from Andrew. When will you resume the preferred dividend payments? Good question, Andrew. So as we've communicated in an earlier AMA as well, the board continues to carefully evaluate the company's current and prospective financial and operating results, as well as the interests of all of its equity holders when making a determination to pay or accrue its Series A preferred dividends. At the moment, those dividends are suspended. An anonymous question came in. Can you briefly provide an overview of the various share classifications specifically referring to the preferred shares, types A and B, and provide the impact to the company in terms of conversion price? And in terms of dividends, can you confirm what the level is that is payable for each class of preference shares and how and when they're paid and accrued? Okay, let me unpack that for you, or try to. I'll start with our preferred A series. So preferred A series are perpetual. They have a liquidation, preference, and face value of $25 per share. They are not convertible at all. They do carry a 9% dividend on the face value, which is currently being accrued, as I addressed in the last question. There is no conversion right or price, and these are paid out on a change of control at the lesser of the sum of the accrued dividends plus face value of the share value. And the conversion share value resets upon stock splits and reverse splits. Let me move on to preferred B. Preferred B series can be redeemed if no preferred A series shares are outstanding, which is currently not the case, after the convertible loan notes have been retired and after the third anniversary date has passed. That's set to occur during 2025. They have the same liquidation preference that I referred to for preferred Series A. They carry a 10% dividend, which is $625,000, which is and has been paid annually. And these preferred shares may be converted to shares of common equity at a conversion price of $27 per share. And upon a change of control, they are either paid out as shares of common equity or can be converted into new preferred shares of the new entity. Another anonymous question. When will the company have positive cash flow and EBITDA for more than 2 quarters in a row? Good question. So although we do share forward-looking statements from time to time regarding our projects and the company, we don't provide typically earnings or profit guidance that is specific. I would point you to and say that your best resource is our earnings power presentation that we update annually. The last update was in May of this year and can be found on our investor page under latest news and company updates. Please refer to that there, where we do give some good information about what indicative earnings of the company could be across some time periods. I think that might be helpful to answer your question. Our last question comes to us anonymously as well. How has the Soluna enterprise value changed? That's a great question. We last updated this for the period ending at the end of last year. We gave that update in our Introduction to Soluna presentation, which was published on April 24th. You can always go to our investor page and look for that presentation, download it to see. Additionally, we're going to make the calculations that I'll give you the punchline to here available as well to download alongside this. The answer is it's changed pretty significantly from the end of last year through June 30th of this year. We've seen an increase in enterprise value of $43 million. Specifically, we went from an estimated enterprise value calculated at $64 million at the end of last year up to our current, which is $107 million. Again, look for the presentation and the details there. Finally, I just want to say, again, thank you for submitting your questions. If you submitted one and you don't see an answer here, don't worry. We'll likely get to it in either other materials or our next AMA. If you're reading this and you haven't had a chance to ask a question, it's not too late. You can link to the form in the video description box, or you can drop your questions on X, formerly known as Twitter. Be sure to tag at Soluna Holdings, and we'll try to get those questions answered next time. Until next time, thank you very much for listening, and have a great month. Thank you.